All right, so on the Active Live webinar page, we have 4 areas. The first area on the left is the IPB tracking, and it shows all of the valid positions, whether they are long or short, the number of shares that were long or short, based on $100 worth of risk, the entry price. This is the reward for risk earned for $100 of risk. So if you have $126 here, that means if you took $100 of risk, you're making $126. If you have a loss of, well, this is $1.50, so that's basically break even. Here, a loss of $60 means you're down 0.6 RR. The best one on the list today is 411. That means you're up 4.1 RR. Now, why do we say 4.1? Well, if you're up, or if you're risking $500 a trade, then you take $500, multiply it by 4.1, and that gives you $2,100 roughly, a little more. Hopefully you get the idea on how that works. Now, this window won't be here much longer because I've replaced it with this new IPB Finder window. It does the same thing as this. In fact, if you compare right now, you will see MTG, for example, I'll just highlight that, has an RR of 4.14. And if we look here, it's 4. Well, it's changing by the second because, of course, this is real time. But you get the idea. It's very close to what is in here. Now, the reason I'm going to replace this with this window is because I want to expand what we cover in these other windows. And so I'm just testing it. I'll test it for a couple more days. Love your feedback on things you feel like we'd be missing if we got rid of this window, things that we need to add to this one. And then once I've got it all figured out, we will just show this window. It's doing the same thing. It's showing you the entry time. So, for example, let's go back to MTG. The entry time is 11:28. If I look here, MTG at 11:28. There's your time right there. All right. What I've done is sorted it by longs and shorts. So the longs are at the top. These are the longs above their resistance on the daily chart. These are below resistance on the daily chart. These are the shorts below support, which is better. We didn't have any shorts today that were above support, but eventually, if on a typical day, we would have an area called above support, and I would list some more symbols there. They're better quality for buys if they are above resistance, or for shorts if they are below support. That's why I do that there. All right, now let's go on to this window. This is our worm long window. It prints all of the valid entry signals for the worm strategy for the long side, for the buy side. We have the symbol, the last price as of right now, change for the day, change from the open, how many trades it has made. If it is red, so you see here some of these are red, that means the expected number of trades is less than 7,500. And I've done that because the less liquid the stock is, the more it can have some slippage. When you actually try to buy the stock, you'll get that slippage where you don't get filled at the ideal price. And that causes you less profitability. And so I've tried to make a distinction in this column with these colors to say, well, you want to probably focus on the more liquid ones because they have the pace to get above 7,500 trades a day, which means hopefully less slippage. Capital requirement, how much capital it takes for $100 worth of risk. And the reason I do that is because some trades you just want to avoid because they're too capital intensive. For example, LQD requires a $234,000 position to take $100 worth of risk. That's just too much. Now, this is before margin, so you can take that number and divide by 3, but even still, that's a ridiculous amount of cash to tie up for $100 worth of risk. So, you probably want to shy away from the ones that are really high. And that's a function of how much capital you have. If you're trading with less capital, then focus on the positions that take less capital to do the trade. RR is the current reward for risk for the trade. Now, keep in mind that the worm strategy is best done between 9:32 and 9:42. You can do it all the way up until noon or 1 o'clock. It depends on market conditions. I'll show you those optimization numbers in a moment. The ones that come later in the day don't tend to work very well on the long side. On the short side, they actually do okay. And you can see today that a lot of these trades that have happened lately, like this is the time right here. So this one came at 322, it's down 0.4 RR. It required 1,990 shares for $100 worth of risk. The drawdown is how much it went down after the entry signal. So we have a drawdown of 0.4. If you see a big drawdown, that means it was probably stopped out. Now again, I wouldn't trust these too much because they're late entries. We really want to look at the ones earlier in the day, which are no longer showing because we've had a lot of signals so far today. But for example, I is up 4.1 RR currently. Its drawdown was 0.33. It required 830 shares to take $100 worth of risk, which was $4,330 in capital. However, that's before margins. So if you're using 3-to-1 margin, which most day trader brokerages will allow, you can divide that number by 3. 52 was the number of trades on the action candle entry signal. So this one made 52 trades on the action candle. Our minimum is 50. That is something that I change from time to time. I'll show you how we do that in just a moment. Candle percent is where the close of the candle is relative to the range of the candle. So this one was a 100%. That means it closed at the very high of the 2-minute action candle. If you have 88%, it means it closed at 88% of the range of that 2-minute action candle. And finally, this column here is the entry signal time. And we use that to determine our ideal entries. You'll understand that a bit more when I show you the optimizations in just a moment. Finally, we do the same thing for the short side. We want to some days be short selling the market and some days be buying the market. Which you do, I will show you how to figure that out in just a moment. But on an up day, generally you want to be a buyer. On a down day, generally you want to be a seller. But there's some tricks to that. I'll show you that in just a second. Same fields, capital required, number of shares, all the things I talked about with that. Now I have macros running every 2 minutes. What the macro does is run a scan on another screen that you don't see. It runs a scan, it grabs all the valid symbols, it pastes them into this radar screen, which then can calculate for whether there is a valid worm signal on the current bar. The current bar is at the top as we go down. These are old entry signals as we go down the list. So that's running every 2 minutes, and it alternates between long and short. So it'll do the longs on the even minutes, and it will do the shorts on the odd minutes. So you actually have a macro running every 1 minute. So at 10:02 it runs the longs, 10:03 it runs the shorts, 10:04 it runs the longs, 10:05 it runs the shorts. And that way you've always got a up-to-date list of the valid worm entry signals for this strategy. All right, now what should you be doing in terms of going long and short? Well, let me explain how to figure that out. So we're going to jump over to a chart of the SPY, and on this chart of the SPY, I've got a 13-minute time frame. So I'm going to just zoom in on this a little bit for you. So we've got a 13-minute chart, and I have on this chart plotted a 30-period moving average. Not a 30-minute moving average, but a 30-period moving average. And here's the basic concept. If you are above the moving average, then we want to be long. So you can see we were long here for a day and a half. Actually, yeah, almost 2 days. Then we want to be short when we are below the moving average. So on Friday, predominantly, well, the whole day we were below the moving average, so you want to be short. Today we went above the moving average at just after the market opened, 13 minutes after the market opened. Well, actually, I think it was about 20 minutes after the market opened that we crossed above the moving average. And the longs did very well this morning. Now notice that since that time we've been selling off, and the longs, which were quite positive, say 2 hours ago, I think they were up about 30 RR. They are now down about 10 because the market has rolled over. So it's very important to watch where prices are relative to the moving average. Now here's your second very important clue about what to do. If you are far above the moving average or far below the moving average, then you have to think about whether you're oversold or overbought. So here we are just moving above the moving average, so you want to be a buyer. Now up here, we are quite far above the support, right? Our moving average of support. So I'm not going to be too enthusiastic about buying anymore because we are overbought. Now we've crossed below the moving average, so you want to think about being a short seller. That's as of about 45 minutes ago. And if we fall really far below the moving average, then we get oversold, and you don't want to be too aggressive on the short side anymore. We had that on Friday afternoon. The shorts were looking really good about an hour before the close, and then a lot of their profits disappeared because we were very oversold, and we rallied at the end of the day and took out some of that oversold nature. So with the moving average of the S&P 500, you should plot this on your own because you don't always see it on my screen. But what you want to think about is, where are we relative to the moving average, above or below, long or short? And also, where are we in terms of the moving average being overbought or oversold? If we're far above it, like we were here, I don't want to be too enthusiastic of a buyer. When I'm crossing above, that's when I want to be aggressive. When I cross below, that's when I want to be aggressive as a short seller. But I don't want to be aggressive when I'm way down here already, because the market is already caught on to that trade. You always want to be one step ahead of the crowd. And the crowd is into it short here, so you don't want to be doing what the crowd does. The crowd is just getting started as a buyer when we're crossing above the moving average, or even bouncing back from being oversold. So that's the time you want to be a buyer. So that's a little bit of a hint on what you want to favor in terms of where you focus on this list. And you can see that the recent shorts, there's a few winners in there. 5.3, 1.7. There's a loser that would have been stopped out. 1.3, 1.95, 2.55. So the shorts that have come up later in the day today are working, whereas the longs are not, because the trend is working against us. All right, so the last thing I want to show you is the results from Friday, and just a little bit about optimization. All right, so what you see on screen now are the day-by-day profits for the different approaches. So we have the long side. Let's just look at total long. The long side on Friday had a 4.9 RR on, this should be April 6th. Fix that. On April 5th, 16.9 RR. On April 4th, 115 RR. Okay, so you can see that. But that doesn't mean that we want to be long all of these days, because some of those days were days when the market was trending down below the moving average, that sort of thing. So let's look at the short side now. On Friday, the shorts made 117 RR, but for the previous 3 days, they were losing. So now hopefully you're starting to get a clue that maybe some days you want to be long, some days you want to be short. And I account for that over here on the right side of the spreadsheet, where I've got in here the little D, U, or T. T is a transition day, U is an up day, and D is a down day. So D day, we want to be shorting. So shorting on Friday was 117 RR, but that was on 107 trades. And I recognize that very few of us, if any, are going to be able to do 107 trades. So over on this part of the spreadsheet, I have capped the number of trades to 20. What that means is that if it was a day when you had 107 short trades, we're only going to do 20 of them. And all I did was take the average profit per trade, which was 1.1 RR, multiply it by 20, and there's your expected, or let's call it possible, RR for the day. And that was 22 on Friday. The day prior was an up day, but there was a lot of trades. There was 172 trades on the long side. We're only going to take 20 of those. So it's actually not a big profitable day, even though there was a lot of long trades to be done. What you see here is the total RR using that approach based on the market move. If you're above the moving average, you're going to be long. If you're below the moving average, you're going to be short. We're going to cap it at 20 trades. So our profit since February 1st, and I shouldn't say our profit, the potential profit, what the model could have done, and whether you do something close to that is up to your skill. And of course, there's going to be some slippage, but that's 672 RR. That's a fraction of, the potential short profit, which was 3,646, because let's face it, we're not going to do that many trades in the day. Those were all the valid trade signals. We're just not going to be able to do that many. And so this is a more reasonable number. I recommend that even take that number and reduce it by 20%, because you're going to have slippage, you're going to have commissions. And even then, it's a function of trader skill. How quickly can you act? Those are all things that take some time to get better at. Now we can do optimizations. I can go into these detailed pages which show every trade. All right, there's every trade for the test period, which is now over 2 months. And I can change the time. I can change it from 1 o'clock ending, so starting at 9:32, ending at 1 o'clock. Let's end it at 2 o'clock. And let's do that also for this screen. So end this at 2 o'clock. And also on the short side, let's, actually we'll leave that because it goes 9:30 to 3. And now we can go back to our summary and see that the profitability actually didn't change that much running until 2 o'clock. I think it was just down 2 RR on that. So this is where we can start to mess around with the values of the different indicators to get the optimal values. And I'm always doing this. I do this once a week where I test what are the optimal values. What about tick count? What happens if I raise that to 60? What does it do to my overall profitability? It dropped it. It went from, let's see what it was there, 50. It was 194 RR on the low liquidity longs. If I raise it to 60, it drops to 148. So let's keep it at 50. All right, so that's how I come up with the values for the indicator that are ultimately built into this. You don't have to worry about the optimizations. I mean, I'll tell you what the optimal values are, but they're all built into the indicator. If I right mouse click on this and go format, format here, and go to inputs, you will see that the tick trigger is 50, the candle percent is 60, the volume signal is 2.5, the price signal is 2. I go back into my spreadsheet. That's the values that are here, 50, 60, 2.5, 2. All right, that's all built in there already. The only thing I want to change is I want to put it back to 1 o'clock because it increases the total profitability from 194 RR to 237. Again, if I go to the long side, this will change. If I go to 1300, it went from 92 to 122. So it's a way to improve the overall profitability. So that optimization process, I'll do that for you once a week. I'm happy to let you know what the optimal values are, but I build them into this, and so you don't really need to worry about it. All right, so that's an overview. It is a pretty awesome tool. I'm always trying to improve it. We are going to add some different fields to this so that you get a little more information. I need some space to do that. And the space is going to come from getting rid of this screen because it's redundant now. All of that information is contained in here. But if there's something that you've caught that is in here, that is not in here, please let me know and I'll figure out a way to get it all built that way. But ultimately, we're going to have 3 screens. They'll be a little wider with a little bit more information. And it's just all automated, running algos. And, let's not trust human beings. Let's trust the computer. It will find every entry signal so that we can then act on them and really put our focus into filling the trade, not into, does this trade qualify? These worm trades all qualify. On this one, I do think you want to take a look at the chart and optimize it and look for the best candidates. I will be making some improvements to the IPB soon. I've got some ideas on how we can get a longer list of candidates as well as improve the performance of them overall, but that's something coming down the road. So there you have it. Hopefully that's helpful. I will stop the recording here and I will post this video on YouTube once I've got it all compiled.